Good morning, everyone. Yesterday's becalmed market reflected another holiday session in Europe. Today we should see more volatility as traders come back to the market. The dollar is generally opening higher, although it's still in a narrow range against most currencies. It's down against the Australian dollar, however, as investors discount a rise in tomorrow's Australian CPI for the first quarter. Prices are expected to be up 3.2%, which is above the RBA's 2% to 3% target. That could put some pressure on the RBA to hike rates, or at least diminish its leeway to cut rates. The Russian ruble continued to fall on the increasing tension in Ukraine. The spillover from that crisis, however, seems quite well contained. Most other Eastern European currencies are a little affected, and gold is only marginally higher. We seem to be in a period of equilibrium with regards to many FX rates. They're just stuck in narrow ranges. This may be because central bank rates are also stuck in a narrow range, and there seems to be little anticipation of any change in central bank policy for the next 2 years at least. That's outside of New Zealand and Australia. The FX market just looks in vain to central banks for direction. As for today's indicators, Canadian wholesale trade is expected to slow in February to up 0.6% month on month from 0.8% in the previous month. The Canadian dollar has been rather weak recently. It fell on Friday despite higher inflation, and some signs of softness in the economy could continue that trend. In the U.S., existing home sales for March are expected to be slightly lower at a 4.55 million annual pace. That's down from 4.6 million in February. The existing home sales figure may not cause much of a splash, however. There's been a lot of talk recently about the lack of inventory as banks slow their pace of foreclosure. So a slowdown in sales could just reflect a lack of supply rather than a lack of demand. The Richmond Fed Manufacturing Index is expected to rise. That could also give the dollar a little boost. For more information, including technical analysis, please read the full comment on IronFX.com. You can also follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google+ to get more trading ideas. This is Marshall Gittler, Global Head of FX Strategy at IronFX Global, wishing you solid trading.